Good day, folks. I hope you're well. There is so much that's happened in the last week or so, with the Terra USD stablecoin breaking its peg to the US dollar. We've also seen the Terra LUNA token tank right along with it. Now, this is exactly what this channel is all about trying to avoid: the unnecessary risks when it comes to investing, particularly in the crypto space, where there is just so much risk out there. Now, we'll have a look at how this has opened the doors to expect more serious crypto regulation from both the SEC and CFTC. We'll have a look what they have to say about this matter and how it's likely to shape the crypto landscape ahead. We'll look at the performance of the company Ripple as far as its XRP ODL service is concerned for the first quarter of 2022, and what price action we can expect to see from the XRP token itself. Then we'll uncover the 4 aces that Russia has up its sleeve to end the unbacked fiat monetary system, and how this should worry the people at SWIFT who help facilitate $5 trillion worth of transactions every single day. So let's get into it. Stablecoins are cryptocurrencies where the price is pegged or tied to something else. In the case of Terra USD, it is meant to be pegged or tied to the US dollar, meaning that one Terra USD token is meant to equal $1 US. So why would people purchase these? Well, first, to earn high interest on them by leaving those tokens at an exchange, and to safeguard one's purchasing power for short periods of time when jumping in and out of other cryptocurrencies in an effort to try and remove downside risk. You can see in this chart here that one Terra USD was worth $1 US for a period of time until finally it broke its peg and came all the way down, losing about 90% of its value. Not much of a stable coin, was it? Here is a price chart of the Terra USD stablecoin sister token called the Terra LUNA, which also tanked in price, going from about $90 all the way down to now trading at less than 1 cent. I'll talk more about how this token relates to Terra USD in just a moment. On the 10th of May, Market Insider published this about why Terra USD and its sister token, Terra LUNA, both failed. It said, Terra USD is an algorithmic stablecoin whose value is fixed to $1. Unlike traditional stablecoins that are backed up by fiat currency and hard assets, including government bonds or even gold, UST, as it's known, has its value set by a computer algorithm. When UST falls below $1, traders can burn coins, which removes them from circulation in exchange for $1 of Luna, the network's sister token. This restricts UST's supply, which then raises its value again. If UST rises above $1, traders then sell Luna to convert into UST, which pushes its price down. At least that's how the theory goes. Now, for Terra USD to survive, it needs liquidity in US dollars. After all, 1 Terra USD is meant to equal $1 US. So notice how the Luna Foundation group plan on fixing the problem. It says in that same article that the Luna Foundation group said Tuesday it would inject $1 billion worth of Bitcoin, together with more funds from other cryptocurrencies to support UST. Last week, Luna Foundation Group announced it had bought $1.5 billion worth of Bitcoin to add to its reserves. It has said in the past it intends to acquire $10 billion in Bitcoin for its reserves. In fact, here lies the problem. If you use Bitcoin or other cryptocurrencies as reserve assets to back your stablecoin, you are effectively using them as a derivative or substitute for what you really need, here being US dollars. You're assuming that Bitcoin and other crypto assets will always be worth something to exchange into US dollars when you need them. Clearly, this has not worked thus far. In fact, there has been talk for a long time now that Bitcoin's price has been supported by the stablecoin Tether, with many claims that it does not have the US dollars it claims. If true, Bitcoin could deflate much further, leaving Terra USD exposed again. Cryptocurrencies that do not derive their value from commodities or real-world utility may not even be around in the future, much like our Ponzi unbacked fiat monetary system. So then how do regulators feel about what's happening in the crypto space, and what can we expect from them? Well, it's revealed to us in this article from Cointelegraph, where it says Rostin Benham and Gary Gensler make their positions clear in keynote addresses at the annual meeting of the ISDA, which is the International Swaps and Derivatives Association, with Sam Bankman-Fried in attendance. In this article, the chairman of the CFTC, Rostin Benham, went on to recall his February Senate testimony to say, "I will continue advocating for and supporting legislative authority for the CFTC to develop a regulatory framework for the cash digital asset commodity market." Now, currently the CFTC only regulates derivatives markets, although it has exerted enforcement authority over cash markets, such as the fine it imposed on Coinbase for improper reporting of exchange volume and self-trading in 2021. So what about Gary Gensler at the SEC? What does he have to say? Gensler spoke about the intersection of crypto assets with derivatives in his significantly shorter speech. He said, "If platforms, whether in the decentralized or centralized finance space, offer security-based swaps, they are implicated by the securities laws and must work within our securities regime." Gensler stressed the need for the ISDA to recognise that if the underlying asset is a security, the derivative must comply with securities regulations as it develops legal standards for crypto derivatives. So we can expect more broader crypto regulations to come in at some point. This should not only clean up the industry, but also breed more confidence into the crypto space. The company Ripple has posted its first quarter 2022 XRP market report. And in that report, which you see in front of you in part, they make a brief comment on the general crypto market. And I thought it's worth just reading this to you. It says crypto markets sold off in the first quarter of 2022 due to the combination of regulatory, macroeconomic and geopolitical factors. Many speculated that record inflation rates and the Federal Reserve first rate hike in 3 years were the main narratives driving trading activity at the start of the quarter. By February, the market's attention shifted focus to the growing tensions in Eastern Europe and Russia's invasion of Ukraine. By March, the focus was on Biden's long-awaited executive order on crypto, as well as the evolving regulatory landscape in Europe, such as the MiCA regulation. The executive order received a generally positive reception from the crypto industry, helping spur the rally seen at the end of the quarter. Now, with so much negative news out there about XRP in the media, and probably some of your friends as well, it's important to keep an eye on the fundamentals. And we get to read a little bit about that here in Ripple's report under the heading RippleNet kicks off year with record numbers. It says first quarter 2022 was a record quarter for on-demand liquidity as volume grew considerably with nearly 8 times year-on-year growth. Overall, RippleNet saw a 15 billion annualized payment volume run rate, marking unprecedented growth as customers use ODL for several different use cases beyond traditional remittances or individual payments, including treasury and bulk small and medium enterprise payments. Now, this is great news for the XRP fundamentals, but what about price action for the actual token? You see here a weekly candle price chart of the XRP token in US dollars over time. Now, there are a number of both fundamentals and technical things I'd like to highlight here. Fundamentally, the use case for Ripple's XRP token has never been so high. In fact, you couldn't ask for a more stellar result from the company Ripple, particularly considering how long they've been around for. Yet we look at the price chart and we see that it's trading at about 42 cents. When it was previously trading at $3, it did not have such a large user base. In my opinion, that creates a great arbitrage opportunity. Too many people focus on price and lose the investing excitement that comes from buying better value. What better possible motivation could there be for shaking out retail investors out of XRP than to tank its price? Perhaps this is related to the importance of XRP's actual function, to be a major contender for replacing the central bank SWIFT system for international transfers. To me, the downside price action risk seems significantly lower than the upside potential. It's not to say that it couldn't go half its price compared to where it is today, somewhere around 21 cents where there'd be a lot more support. Keep in mind though that we're living in extraordinary times and extraordinary things can take place. directly related to the demise of our current global monetary system. I believe that XRP is a very big part of that, and I'll talk a little bit more about that later. One thing I've noticed is that the crypto fear and greed index has been sitting in the red zone for some time now. That's the zone of extreme fear. Ordinarily, this would be the ideal time to be purchasing the right kind of cryptocurrency or any other asset class for that matter. If you're not sure or are fearful, then I highly recommend you watch my video entitled How to Diversify Investments, Use Volatility. It will give you some great ideas on how you can best take advantage of both volatility and fear in the market. I'll leave a link in the description below. I'd like to give you my take on this article from TFI Global entitled, "By pegging gold to the ruble, Russia has just wiped out the dollar's clout from the world markets." Now, it essentially shows how Russia has 4 aces up its sleeve, which it's using to end the unbacked fiat monetary system. Let's take a look at these one at a time. Ace number 1. Russia puts the ruble on the gold standard. Recently, the Russian central bank announced that it will put the ruble on a gold standard. The bank pegged 1 gram of gold to 5,000 rubles. Now that means 1 troy ounce of gold, or 32 grams of gold, would now cost 160,000 rubles in Russia. At the current exchange rate, 32 grams of gold would cost roughly 1,600 in Russia. But as of today, the 19th of May, 1 ounce of gold is actually $1,815 USD. This means there's more upside potential for the ruble. Now, since this announcement, notice the relative strength of the ruble relative to the major global currencies of the world. There it is to the US dollar, to the euro, to the British pound, to the Chinese yuan, and to the Japanese yen. In all cases, the ruble is the fastest growing currency in value. Ace number 2. This move to encourage domestic gold inflows to the Russian central bank. Since the West has banned Russian gold under sanctions, Russian banks would be more than happy to sell whatever gold they possess to the Russian central bank. They will sell even on discounts since they can't find buyers in the West due to sanctions. More domestic gold flows to the Russian central bank would mean the ruble would get stronger with each passing day. Ace number 3. How Russia has weaponized its gas trade with Europe to strengthen its currency. Russia has asked unfriendly nations to pay in gold or the ruble for their gas trade with Russia. That would encourage international gold flows to the Russian bank. European countries would either have to buy rubles using gold or simply trade through gold. In both ways, the EU will end up helping Russia deepen its gold reserve. That would mean that the ruble's value would get even more strengthened. And ace number 4. Russia to declare the ruble as a substitute for gold. Russia will simply put its currency on the gold standard. It can simply declare the ruble a hard gold substitute at a fixed exchange rate. Now, when a currency is backed by gold rather than the US dollar, it becomes more stable and stronger. With a strong ruble backed by gold, Russia would simply be in a position to insist on payment for Russian commodities in rubles. So, each time any European country pays Russia in the ruble or gold, it will simply end up strengthening the ruble's position even more. In summary, they had thought that by devaluing Russian gold and by sanctioning it, they would reduce the amount of stuff Russia could buy using that gold. Instead, the ruble's binding with gold and ensuing decision of forcing EU nations to pay in ruble or gold for their gas trade with, Russia have simply turned the table on the West. Just imagine that as time goes on, your hard-earned fiat money continues to lose value whilst you're having to pay more and more for everyday goods. At some point, people will force their leaders to move to a gold-backed currency as well. Expect to only hear more about this as time goes on until it's a fully established global norm. As it's the end of the road of our current global monetary system, I would expect financial chaos to continue everywhere as economies continue to deteriorate due to negligence on the part of central planners. I would expect volatility to also continue in all financial instruments, whether it's stocks, cryptocurrencies, or anything else, until the right kind of global monetary system is fully established. It's not to say, though, that initially an attempt will not be made to establish or engineer a very unfruitful monetary system that only benefits the very few at the top at the expense of the rights and liberties of the majority. The financial reset could occur suddenly, catching a lot of people off guard, with perhaps just an announcement of some black swan event. If not beforehand, this is likely to cause a tsunami of demand for gold and silver, causing prices to skyrocket unlike the world has ever seen before, largely because the debt in the system has never been so extreme. Countries that have gotten tired of the weaponized SWIFT global payment system may decide to abandon it in favour of something else. Ripple will certainly be in that position to fill that void with a trusted, secure, currency-agnostic global payment system. Regulators in the United States may be forced to give XRP the green light, allowing it to be freely traded, whilst the unbacked crypto competition gets completely cleaned up for not adhering to fundamentally sound money principles, a bit like our current fiat system. Out of the 19,000 cryptocurrencies that are out there today, I fully expect that more than 99% of them will die a slow or sudden death at some point. So hold on to your hats, folks, and ensure that you've done the research to ensure that your cryptocurrencies are in the safe zone so that you can see better days ahead.